Hello and welcome to Halftime Report. I'm Sonia Shenoy. The market has still not recovered from the lows of trade. So after the early morning gap down, there's no recovery in sight just yet. That just goes to show that this market is very, very cautious at the moment. A little bit of intraday recovery is what you're seeing, but nothing convincing or conclusive at the moment. What the Nifty has done is slipped below the 200-day moving average, which is 17,427. So a crucial level on the downside has been broken. The Bank Nifty is the one where you're seeing intense pressure right now. In fact, the Bank Nifty is approaching its 200 DMA of 39,500. So in that context, it is quite a weak session. Now, this week, a lot of financial stocks are big losers, whether it's ICICI Bank, Kotak Mahindra Bank, Bajaj Finance, all under pressure this week, down anywhere between 2 to 4%. And then you have the jobs data that we'll be looking forward to later in the day. So there is definitely caution on board. Rajesh Kothari, who's the MD at AlfAccurate Advisors, joins us now to talk more about that. Rajesh, hi, good afternoon. What do you do in a market like this? You know, it's pretty much going nowhere. The headwinds are increasing, especially from the global arena. How are you positioned now?
Well, I think, at times to remain disconnected from the global macro noise, I think that adds huge alpha to the portfolio, to be very frank, because the narratives keep changing quickly. Just about 2 weeks back, everybody thought that, we are probably now going to be quantitative tightening is going to stop. And in last 7 days, again, the narrative has changed. So who knows the narrative after 7 days? And of course, you cannot change your portfolio strategy based on every day's view. So I think, having said that, if you look at yesterday's episode in US market, particularly with reference to that financial corporation, that again tells you that, the difference between Indian economy, the Indian banking system versus the US economy and US banking system. And that's a probably good difference between the two. And therefore, beyond the point, I don't think one should read too much about the US economy. Yes, undoubtedly, markets are linked to some extent. And RBI also might have to act forcefully, as Fed may do a little bit further rate hikes. And to that extent, there can be short-term volatility. But I don't think one should rate too much beyond that point.
Okay, what do you do with individual stocks, Rajesh? Because I know you track many of these stocks very closely. So I'm going to start with them one by one. Tata Motors is in focus today. I think we're seeing an IPO from the Tata Group after 19 years, right, with Tata Technologies. The stock Tata Motors has not given great returns to shareholders, but yes, this monetization is definitely a positive. But at this price, how does the risk reward look?
Currently, we do not own this name, so I would not like to comment on this specific name. Having said that, I think the CV cycle, the commercial vehicle cycle, remains strong. If you look at the last 6 months, they've been extremely good, and that is, of course, good for the Tata Motor as well. And if you look at from the global front side, I think as the shortage of semiconductor is reducing, probably if I look at the global car players, particularly all listed global players globally, I think they have done reasonably well because the demand is still very good from the global perspective. So probably that can work in favor of Tata Motor. But beyond that, I don't have any specific comments. We do not own this name in our portfolio.
Okay, so, tell us, how do you approach this stock-wise, right, this entire market? I mean, this is, of course, since the market is range-bound, as they say, it's the best time to be hunting for value, to be looking for good quality names. If you had to create a sort of a shopping basket for us of 4 or 5 names from the large caps and the mid caps, what would they look like?
Well, basically, the one sector on which we are positive is, the banking and finance. And in banking and finance, we own, primarily the top 5 players. That's what we own. I think the positive surprise in banking and finance is going to be the net interest margin. I think entire street thought about one month back that net interest margins will come again back to normal. But I think because of this interest rate hike cycle, which may continue for one more quarter, even the growth in FY24 can be a positive surprise for the street. So the net interest income growth, backed by reasonably good net interest margins, these two things are going to be positive surprise for the street. Asset quality, anyway, everybody knows it has improved a lot, and I don't see any major challenge from the asset quality perspective. And therefore, I think banking sector will continue to get tailwinds from here on, even for another probably at least next 6 months to 9 months. On top of it, of course, the capex cycle is improving. And if you look at the non-food credit growth, while we do get a lot of data on US and markets are down, but look at the Indian data. Look at the non-food credit growth. I think it is sixth consecutive month of double-digit non-food credit growth. It means the loan book is going to remain very, very strong. So on one side, your loan book are going to be strong. On the other side, the net interest margins are not going to contract in the short term. And therefore, the net interest income growth will also remain very strong, double digit. On top of it, the provisions are going to be lesser. Credit cost is under control. So net, I think the banking stock should do well even from here on. So that's the one thing which we are positive.
Okay.
Second theme, which I've been talking on your channel almost, I think, from last 7 quarters, is the capex play. And whether you look at the new growth drivers, be it data centers, be it smart grid, be it the product portfolio companies, I think most of these companies are doing extremely well. The third quarter results is again showing these trends. Most of these companies have reported 15 to 20% order inflow growth, which is probably historic high in last 13 years. I repeat, it has been historic high in last 13 years. So that is the one space which we like. We like the companies which have a product portfolio backed by the technologies, backed by the parentage of the multinationals with a strong R&D. And I think this kind of companies are going to do extremely well. So we continue to own, names like ABB is one of our large holding, in our portfolios and companies like that.
Okay,
so
got that. Got that, Rajesh. So we've got a fair amount of, an idea about how you're playing the capex cycle. By the way, today in the market, there's a very clear defensive bias, and I'm looking at a lot of stocks on the healthcare and the FMCG side. They're moving higher. Should just pull up some of these names: Britannia, ITC. That's where you're seeing some semblance of, green come through. Rajesh, if the market continues to be a little challenging, then would you look at either of these sectors, either healthcare or FMCG, which have been traditional defensives?
Yeah, so that was the third sector I was coming to. That consumer is a third sector which one should look at it. And in this consumer, you need to look at both discretionary side as well as the defensive side of it. But you need to be very selective in this space. The raw material costs are now going to be under, is going to be good for these companies. So gross margins will improve. We have seen the worst of raw material inflation in last 3 quarters, which will positively benefit most of these, FMCG companies. But on discretionary side also, we like companies which are into wire and cables. We like companies which are into retail side. And those are the bets what we are taking from the portfolio perspective.
Okay, Rajesh, thanks a lot for joining in. Very helpful, actually, how to approach the markets. And you're saying you like the banking space, so perhaps that's the space to look at after all the fall that we've seen in the last many weeks and months. Thanks for joining in. The market has not recovered at all. It's still at that 17,400 mark. So let's do one thing. Let's take a quick break. Here's a programming note, though. On the 14th of March, CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India currently and across the world. The event starts at 4:30 p.m. on the 14th of March, and you can catch all the live action right here on CNBC-TV18.